Cool. Hello. Good afternoon. Just gonna take a look at some markets here. And let's go ahead. I can share my screen. I'm gonna share this screen here. Share the whole screen. You can see it. Take that down. All right, cool. So this is the indicator that I coded here. I'm actually trying smart candles out to see what they're doing, see what they're about, see if they're accurate, see if they can help my system. I like the companies that give you like 7 days, 30 days to try it out. You try it out. If you don't like it, get rid of it. It's a pretty cool system. Um, but here, just looking at a couple of things here. You can see this signal here. Now, if we enter over the top, then we won't have to worry about what happens here. Okay. But at the same time, your stop loss should have been probably below here, like down here. So when you enter in on this candle, your stop loss should have been down here. If your stop loss is down here, then you're not worried about this move here that can happen and then you come, which some people might want to wait for the pullback and then take it. Okay. This signal is probably a little bit better because right over the top, it goes immediately up. Now I want to show you something here because you're going to see a lot of signals where you see a lot of the whipsaws like here. It says, all right, we're going to go up. Now it did give us a day up. So for day traders, that's cool. If we have an accuracy of being up here, it gave us a day, and guess what? It broke even. So I would just close out like right then and there. It's all right, cool. I'll close out. But let's say if we waited for the pullback, if you went for the pullback, you would have still made money when the market came back up. If you can see a little bit, but it would still would have made money. Okay. Um, you could have also held on to it and then got out here on this day. Okay. Depends on what you're into. Usually you want to hold it for more than one day, like, here. We'll get those types of moves. But I want to show you something here because um, this is something that I haven't learned how to code yet, but I plan to code. So we can see that the RSI is going down. It's a momentum indicator. All right, but the price over the same period stayed the same. And actually, I want to make it bigger so you can actually see it. But we're only caring about this point to point. So from this point to this point, this is what's called bearish divergence. Okay. What it means is momentum is coming down, price should be coming down as well. But as you can see, price is still staying the same. And then you can see it's hitting off this resistance level. And actually, I can actually show you how this resistance level, it's not even new, it's not a new resistance level. It's a rather old resistance level. Okay. It's a level that was once support. As you can see, the price came down here, then it came back up, came down, it played a little game here, then it finally came down, then it pulled back, and now it's resistance, and it came down, creating some new support, and then it went back up to the resistance. And this is actually how we would measure this trade. So, for example, when we get this signal here, and this is really, to me, the only way you can get 87%, 90%, in which most people, they'll be lucky to get 65 to 70%. That's like godly trading right there. 50% probably about average. But what makes the difference is how much money you make when you win and how much money you make when you lose. You want to be making double the amount of your losses, and that's how you stay consistent. And that's how you stay alive. But, and then up here, we have resistance up here. Okay, so if we did cross this point, then we would bet on this level here to be our next level. And so here, boom, it comes down, it wicks off the support, and then now support becomes resistance, and that's what happens. When we get past resistance, this would be support. We would expect this to hold up as support, just the way this did. This support, boom, comes down, boom, comes down, comes back, new support, hits new resistance, okay? And for anybody that's new, resistance is just a ceiling. It's what's above us, and the floor is just what you stand on. You usually will have a hard time going through that. You may have to stump a little bit, maybe use a sledgehammer, and that's what price is. And so that's how we know if it's a big move or not when we get past there, when we have this sledgehammer event. So if you look at this signal here, if we would have taken this signal, we would have watched how price behaved at this level. This probably would have been first target. And then once we saw that it closed below, this may have excited us to the point that we can say, all right, go ahead and enter the market. This is another trade that I would say is significant because we don't know what's below here. Okay. I would have to go back into the market and see if I can find something. And it looks like I can. Where, guess what? The market was, in fact, holding up as resistance, as support right here. So this is previous support. So previous support, it goes up, boom, 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 boom. Now, what makes these signals as good is because you can see over the top of this signal, there's not really a level of resistance holding these trades back. And so this is the part that I haven't coded yet, but I'm going to try to figure out how to code because this can, as you can see all these signals here, all these signals, all these signals, all these signals. Are we going to actually get past this level or what? Well, guess what? When we get this signal, we're past that level, and that is when it explodes. So trend lines is what makes us effective as traders to move forward. Uh, and then divergence. Divergence let us know, okay, it's time to get out. Something's about to happen here. This right here, this little divergence here, price is about the same, but momentum is going down. What happens next? We get a nice little drop, okay? And so these constant wicks here is also a signal that price is likely going to drop soon. But we could get some wicks here on this level, like here. We got the wicks off this black line. Moving averages are great ways to measure wicks as well. For example, here, this is a good trade here, okay? It's wicking off. Now we got the red arrow, so we know that it meets our conditions. But even if I take that red arrow off, which let me find one, you can see like a wick off of a level usually works out in the opposite direction, okay? Except for here. It didn't work out here. Why didn't it work out here? We got a nice little wick here. This is because this is holding up as support. So it didn't have much room to break through. And that's what we have to measure. Is there room to break through? Should I take this trade here when it's just that much down? Okay. I'm probably going to use this as my stop loss, maybe a little bit above it. So I'm going to make the measurement happen where it's just going to say, all right, so if I get in here, then we have what, 209 pips, 227 pips to the downside. All right. And then I say 121 pips. Well, guess what? I'm risking twice as much as I would actually earn. So I don't want to take that. Okay. And so this is how you would actually start to weed out signals. Okay. This is what I would call a false signal. But like Vantage Points AI software, AI, you want them to weed this out for you. You don't want to have to weed it out yourself. And if they're talking about 87%, the only way you can achieve 87% is by weeding out the noise. This right here is noise. It's noise because I have this resistance level, which I would put my stop loss a little bit above it because this can happen. You see that wick? That can happen. So I'll probably put my stop loss up here, maybe up here. So I need room for it to really make noise. I need some room, okay? And so we go in, we take a look at it. Here you can see this wick here. So this is a opportunity to enter the market early, possibly. Okay. So what we can see here is that we've crossed the red line, which is the SMA, the simple moving average. The black line, I believe, is the EMA. And you can see that we crossed the red line. We have not crossed the black yet, but guess what? We're below 50. We're below 50, okay? We also can see something great here. This is what's going on the, what's going great on the uh, chart here is that RSI, if you have to plot this 50 because they don't allow you to put a channel. Well, okay, they can show you the code. They're actually sharing the code of how to code RSI. So if you wanted to come in here and tweak RSI a little bit on how they do it, you could do it, which I think is kind of cool, but it doesn't need to be tweaked. But as a programmer, this is why I got into programming. This is why I got into programming languages. Um, because you can go on some websites and you can find out that if you read the book on relative strength index, they coded it wrong. Sometimes they code it wrong. Like seriously, they have a serious bug. It's not doing what it's supposed to do. It's off by a little bit and it's not accurate. And so you would be able to examine this and say, hey, is this actually accurate? Like go to 7 different sites and you'll see sometimes, even though they look like they have the same data, it's not the same data at all. It's like really bad data and or it's not the data, but it's the formula, it's the way they calculate things. Encoding the way you divide, the way you multiply. For example, you see in there using parentheses. If you don't use this parentheses in code, sometimes it does not give you what you're looking to get. And trust me, I learned this because I learned how to code several years ago. Before I joined the Lambda school, I learned how to code just so that I could code indicators because I started noticing inconsistencies. So I said, I want to do it myself because I want to make sure that it's accurate. And if you're really serious about trading, I recommend coding because it's not enough just to say, okay, when this goes to blah, 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 blah. Like everybody uses the RSI. This is how they use the RSI. For example, this is a great signal here. Um, this is what they call a pin bar. Okay. So this pin bar is right here on the support level. That's a great signal here. Okay. Then we also can come down here and you can see, if you look over here in this left section, you can see RSI is at 28, okay? And we know that this is a pin bar, it's hitting the resistance. So this says that the market is oversold. So when you get to the 30 or below, the market is oversold, which rarely does it happen. But it's telling us, hey, the market is oversold. And so by telling us the market is oversold, we're like, okay, market's oversold. We got a pin bar on support level. You could have took this above here and virtually predicted that it was going to hit this level again. Virtually could have predicted that, okay? Um, Now, you probably would have aimed for this level here, but this resistance did not hold up. This is what happened here. It went up, created some resistance there, boom, boom, boom. Resistance, resistance, resistance. You want 3 or 4 points. Here we have 3 points. Those wicks are the points. We have 3 points, 4 points if we put it there. Okay, but you see the market did not get up that high. It exhausted itself. And I showed you that so that I could show you this. This 50 level is really the momentum gauging level. It's the level that you have to put on the chart yourself. But as you can see, we can see that the level hits above 50, but we're wicking on this level here, the same level that this one wicks off of, okay? We're wicking off that level there, and then it's wicking off of it again, but taking a downturn. It's going down lower. As you can see, it was at 52.64, and then it goes down to 50.49. It's still above it, but it's going down. And then if you see this here, 44.73, it's going down. And so at this point in time, we can see that it's also across the SMA, and we can probably bet to take this down to the downside. Like, I don't actually need to have, so I'm going to do this. I'm going to take, oh, the SMA is black. I can take the SMA off and you'll see like, my bad, I didn't save that. So the SMA is black and the EMA is red, okay? So we can see that it closed above there is below 50. We could take that signal by itself. We don't even need the black SMA. Like you can really create your own system, whatever works for you. You can have your own rules. But when you're seeing things like this, where you're saying it's barely got above 50 before it started to go pull back and go down, and then it crossed below the EMA, that's confirmation. Here is another confirmation. So let me get rid of these. I want to get rid of I want to get rid of all of these real quick. Save. So I'm gonna get rid of those, and you can see here this wicking off of the EMA level. Okay, wicks off the EMA level. That serves as support and resistance, but it moves for you. But it always serves as support and resistance. And so, as you can see now, uh, when it crosses below here, now it's saying, okay, it's resisting, resisting, resisting. It did go up above a little bit, but it came back down. If you look at this signal here, we are below 50, okay? And so you could have entered the market here. Of course, that's one of the arrows, but the arrow was, we didn't have an arrow on this one, and we could have took this one as well, and it still would have worked out. Pretty much, you can create your own system. You don't have to follow everyone's rules. You may see some things, and it's times when the market changes and you have to go with what has changed. For example, here, this is another wick. So it closes below, it wicks off of here. This is a signal. This means that this EMA is serving as resistance. So we could put a stop loss above here maybe, and we can bet that it's going to continue down. We also have parabolic SAR on here that's telling us the trend is bearish, okay? And then we're saying we're wicking on the EMA. So that's enough for me to say, let's enter. Maybe it's not. Well, let's go look down here. Well, we're below 50. That's interesting because the market went up and now next day it's going down. So yeah, that's confirmation. Let's go. Boom, 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 boom. And you can see. So that's all we're doing is you're aligning all the tools up for yourself so that you can make sound decisions.